Hey, welcome back to the channel. In today's video we're going to be analysing Shake Shack stock and going over a few reasons why it could be a potential investment. But before we get started, make sure to turn on notifications as is by far the best way to support the channel, and leave a comment down below on any other stocks you want to see featured in a future video. Shake Shack is an American restaurant chain based in New York City, currently trades at $49 per share and has a market cap of just over $2 billion. As a small cap company, I personally believe it's overlooked, has exponential growth rate of over 25% annual growth in its revenue year over year for the last 5 years and is expanding internationally. Yale University actually used Shake Shack's management model in a case study within one of their management courses. The infographic on the screen is actually derived from that case study. I'll leave a link in the description to the entire article published on the Yale University website. This shows the positive view that respected institutions have on Shake Shack's business model. Shake Shack have a simple yet highly engaging blueprint that is replicated across all of their stores. They are known for their outstanding treatment of customers and brand loyalty. They want it to feel as if every customer is in a friend's house and it's open, you order and pay at the same area where you wait for your meal to be prepared as it's prepared in front of you. I believe this engaging atmosphere that they have is what sets them apart from other competitors. In a McDonald's, it's just tons of people crowded into one area where you sit down and eat. Shake Shack is a bit more personal, and I think that's what they have to do because they're such a small brand. But they are now in 20 states and 12 different countries, which is definitely strong for their business, but they are undergoing several threats to the core competencies of the business due to coronavirus. Although Shake Shack's business model has been highly effective over the last few years, they're finding it very difficult to adapt to the new business climate. Shake Shack lays off hundreds as it sells stock for much needed cash. They burn through $1.2 to $1.5 million every single week. The vast majority of that is cash payments for rent for their stores, which they're aiming to defer until later quarters. Shake Shack's business model relies on a constant flow of consumers, and they've also drawn down $50 million from their credit facilities. With the aim of helping small companies, the US launched the Payroll Protection Program, where Shake Shack were given $10 million during the pandemic, but they had to give it back as they didn't qualify, as they're actually worth $2 billion. So that's also a negative for the company. They thought they had $10 million to help pay staff and keep them on the books during the pandemic, but it looks like that's not the case. Shake Shack's unique treatment of customers has been imperative in the success of the company, and I believe will be just as important, if not more important, in the short term from now on out. The fast casual burger chain said it had $112 million in cash on hand, and that is burning through $1.3 to $1.5 million per week. That weekly burn rate includes about $800,000 of cash rent payments, for which the company is discussing deferrals or abatements with landlords. Currently, just 57 of Shake Shack's 120 licensed global units remain open, which obviously leaves 63 of them temporarily closed. This is going to put a lot of downward pressure on the stock price in the short term. I personally do not expect a profit for Q2. I think they'll make a loss in Q2 and Q3, but hopefully things will be up and running again by Q4, and that loyalty will shine through once people go back out to their local restaurant. Shake Shack stock appears overwhelmingly cheap from a historical standpoint. 25% annual compounded growth rate of revenue over the last 5 years, $595 million in total revenue for 2019. If they could continue that 25% growth rate, in 3 years' time they'd have over $1 billion in revenue. I do not expect that to be the case. I think their annual revenue compounded rate over the next 5 years will be something approximately 12.5% to 15%, as opposed to the 25.5% they've achieved over the last 5 years. It's very important to compare it with the sector average and what other companies have done. If you look at Dunkin' Brands, they used to have double-digit growth rate. Now they only get about 3% increase in revenue year over year, and their stock price has obviously not grown at 20% every year, as they've slowed down to the 3% growth rate. So it's very important to take that into account. That historical data may be accurate for the short term, but not for the long term. I tend to look at the trajectory of a company excluding the net profit. Of course, that needs to be taken into account, but I don't put as much weight into it as many investors would. But for a restaurant chain, it needs to be profitable, because times like this will arise where it's tough economic conditions and people won't be able to go to a restaurant chain and spend $12, $50, $20, $30, or if it's a family, maybe $100 in one sitting. So it's very important that they do become profitable in the next few quarters. Shake Shack's business model revolves around expanding into international markets as opposed to maximising domestic profits. That could definitely be their Achilles heel in the short term if they don't sustain their cash on hand that they have. They currently have $112 million, but if that does decrease below $50 million, they could be in a lot of trouble and will find it very hard to raise capital, as investors may be fearful that they will not return their investment plus interest. This could definitely put a lot of pressure on the stock as well in the short and long term if they do not rectify this problem within the next 3 to 5 years. The left side of your screen has the annual net income and the right side is the quarterly net income. As you can see, it hasn't even entered triple digits yet and won't for several years, but I do not believe that'll be an issue if we can get out of this global health crisis. Shake Shack's average stock price in the last 52 weeks was $67.74. It's currently trading around $50 per share. I tend to buy my long-term investments below their average 52-week price, as it's a good sign that it's not overpriced in the short term. I do believe that Shake Shack will become a triple-digit stock price in the future. I'm very optimistic about the company's outlook. I do hope to revisit this company in a stock analysis in the future and publish a 15 to 20 minute video going through all the financials to 10k and everything related to the company in general. It's very hard to do analysis on a company during a global pandemic. Their stock has dropped significantly since the beginning of March, and they've had a lot of pressure on their supply chain and on the company in general. If you did enjoy today's video, make sure to drop a like, subscribe to the channel as I said if you're new, and turn on notifications if you're already subscribed to the channel, as it is by far the best way to support the channel. Thank you guys for watching. I'll see you guys very soon for another video on the channel.